these private equity businesses who are on Main Street all across the United States don't have a little asterisk on their sign that says backed by private equity.
What is it that makes you believe that the interests of private capital align with the interests of American people?
Each of those investments is a long bet on the U.S. economy. Private equity, private credit, we don't succeed unless the U.S. economy succeeds. There are over 13 million Americans right now who work at companies that are backed by private equity. Look at housing, right? In the United States, we have a housing crisis. And there are some on the far left who want to blame that crisis on private equity.
There's a lot of people in the mainstream finance world bad-mouthing private credit at the moment. Talk of systemic risk. I don't see that at all. I see it as the opposite of systemic because private credit funds are funded with equity. And so these are grown-up investment decisions. It's not risk on risk and it's not leverage on leverage.
We're really excited that the Trump administration is offering sort of that, as they call it, democratization of investment.
Will Dunham, welcome to Fund Shack.
Compelling investments can hide in plain sight. Brookfield's approach to private equity focuses on essential industrials and business services that help shape modern life, yet are often overlooked. It takes vision from an integrated team to see their potential, perspective from a $1 trillion ecosystem to acquire with precision, and expertise from more than a century of owning and operating businesses to build lasting value. It takes industry. Learn more at brookfield.com/ittakesindustry.
You are CEO and president of the American Investment Council, which is the advocacy group for private capital, for private equity and private credit firms over in the US. And about half of our listeners are in the US. Could you tell me a little bit about your membership? What's your mission? What's your membership criteria and who are you representing?
Well, first of all, thanks for having me on. It's great to be with you today. And we are the largest private equity and private credit trade association in the United States. And we have members all the way from over $1 trillion of assets under management, like Blackstone, down to the smaller middle market. So we really have a big range of members. And our mission for all of those members is to protect the license to operate. And what does that mean? Well, unpacking that a little bit, it means a reliable, reasonable, predictable tax and regulatory environment, largely. And so to execute on that mission, we do a lot of advocacy. We do a lot of education. That education is really at the heart of what we do. We spend a lot of time with Congress on Capitol Hill. In fact, we were just there a couple weeks ago with two small consumer brands that are private equity backed. One, an ice cream shop. They started as a food truck, actually, Van Leeuwen. They're now in 300 stores nationwide. And so we were taking ice cream sandwiches along with sort of that message about private equity and what private equity backing can do for entrepreneurs. So that's sort of part of our educational effort, is to introduce folks to brands and tell the story of private equity and what capital can mean.
What is it that makes you believe that the interests of private capital align with the interests of American people?
That's a great question, and that's really at the heart of a lot of our message. When we go to Congress, we meet with an individual member of Congress. One of the first things we do in every meeting, and it might be the most important thing we do in every meeting, is hand them a list of every private equity-backed company in their state or district. And that often represents thousands, tens, or even hundreds of thousands of jobs. And that these private equity businesses who are on Main Street all across the United States don't have a little asterisk on their sign that says backed by private equity. And so that's the first step, is sort of helping folks understand just how many businesses across the United States, how many jobs, how many families are impacted in a really positive way by private equity. And the other thing is, each of those investments is a long bet on the U.S. economy. Private equity, private credit, we don't succeed unless the U.S. economy succeeds. Our investments, our portfolio companies don't succeed unless the workers succeed and the communities they're in succeed. And so we think there's really great alignment. And that's part of the sort of education that we're doing, is to help folks understand just how synchronous and how well aligned our investments are with sort of the long-term trajectory of the U.S. economy. There are over 13 million Americans right now who work at companies that are backed by private equity.
What's the typical response, or is there a typical response when you lay that out to policymakers?
Well, the first response is almost always surprise. A very frequent second response is, "How can we help?" We want more of this investment in our district. We in fact were just in Indiana, which is in the heartland of the United States. Indiana is the manufacturing capital of the United States. That's their tagline. 1 in 5 folks in Indiana, Hoosiers, they call themselves, are in the manufacturing business. And so, one of the things they're looking for is more private equity investment in Indiana. And that was a great chance to talk to folks in the district. Yeah, we were in Indiana's second district with Representative Rudy Yackham. Talk to folks in the district. Talk to them about sort of the workforce they have, the leg up they have in terms of expertise, and sort of what more investment could mean for that district and that state. So, a little surprise, and then sort of people lean in and say, okay, well, how do we get more of this investment?
So we all know we all inhabit two worlds these days. We have the real world and we have the online world. And if you like Google private equity or whatever, you can get one picture of private equity, which is highly, highly contentious. You'll get the stuff about investment returns and so on, but then you'll get lots of scare stories. And then you've got the real world. What's your perception of how, the reality in Indiana or whatever compares with the perception of private equity online, let's say?
A lot of the headlines that you see online about private equity and private credit, we think are badly misleading. You look at a number of sectors where there are headlines that, on the surface, look at housing. Right, in the United States, we have a housing crisis, and there are some on the far left who want to blame that crisis on private equity. Well, first of all, the numbers don't bear that out. Private equity has a stake in single family homes, but it's less than 1% of the overall housing stock in the United States. So just from an economic standpoint, those headlines and those scare stories are really an absurdity. They're not grounded in fact or reality. But then you dig a little deeper and you look at what private equity is doing in the single family housing market. The first thing is we're bringing homes online. We're actually increasing the overall stock of homes in the United States. A lot of our members are doing what's called build to rent. And so they're actually bringing new stock online and increasing the overall pool and helping address that shortage. Like I said, that's somewhere between 4 and 5 million homes in the United States in terms of how many homes we're short. And so private equity is helping solve that problem. And in the housing market, the other thing the private equity industry is doing is providing a chance for families to really take a bridge to ownership. If you're a small family and you're sort of saving up your nest egg, you're saving that down payment. Interest rates are high, and it takes longer to save and longer to buy. I think the average home purchase in the U.S. now is 40 years old, and that's higher than it's been in many, many decades. And that's due in large part to interest rates and how long it takes to save up for that down payment. Well, in the meantime, families want to live in a neighborhood with good schools that are safe, that are walkable, and private equity often provides that sort of bridge, an opportunity to live in a neighborhood for a family who has targeted that school district, and they're still working on saving for their down payment. They can rent a home in that area where they want to live, and we think that's an extraordinary opportunity and a positive good for families in the United States, and just kind of acknowledges the reality of our housing market. But again, we're taking steps to solve some of those problems.
Not to get too much in the weeds, but I think I remember reading that one of the private equity structures allows for a part ownership within your rental agreement. Have you come across that, or have you looked into that?
Yeah, that's right. That's another model is rent to own. And
Rent to own,
so
right?
yeah.
Yeah.
And so there are all these different ways that the products our members, our private equity members are offering, provide really solutions to American families, and are helping solve some of the problems in the meantime in terms of the shortage.
So that example you bring up, so that's been very high profile. It was mentioned on the Tucker Carlson show and a few other um, big shows. And there is kind of a hypothetical, theoretical, let's say, logic to the idea of a large private investor coming into a certain area and like cornering the market for homes and then raising rents. And then there's, oh, everyone will become a society of renters if Blackstone or whoever owns everything. And you can kind of see the theoretical logic of this. Um, but you're saying there's no evidence to back that up.
Well, in fact, the evidence points the other way. I think if you
Right.
look at the overall U.S. housing stock, private equity owns less than 1% of single family homes. It's a tiny fraction of the overall market. And so, it's an economic impossibility
Yeah.
for what you're describing. Cornering the market with such a tiny share is impossible.
Yeah.
But we are in fact growing the pie, and we think that's a really good thing for the American housing market.
Mm. This is really going to go against the grain on YouTube because if you Google private equity and housing on YouTube, you will not hear this perspective, which is why I think this is an important conversation that we're having as private equity particularly increases its shareholder base into wealth and so on. People want to know that the investments that they're backing are fundamentally ethical. And so that's why I'm asking these questions. But in terms of the AIC, I'm guessing you've kind of got, and you've referred to this already, there's kind of two hats. You have to look at specific regulation that's coming through, but you also have to deal with kind of grassroots perception. How do you divide your time and allocate your resources towards one or other of those things?
Yeah, well, so we're a nimble team here at the American Investment Council, and we spend a lot of time on grassroots education. So that's a big piece of what we do. Again, telling the private equity story, sort of giving tangible examples to folks of sort of growth. That's part of the story, but also products and brands and innovation.
Right.
A piece of that in the healthcare space. We love telling the story about private equity innovation in the healthcare space, and you need more of it. Manufacturing is another great example. Here in the United States, there's more reshoring than ever. There's a lot of talk about it in the political sphere, but in the private equity sector, quite quietly, we're actually doing it. Over the last decade, private equity has invested $1 trillion in United States manufacturing. $1 trillion, really an extraordinary sum. And you can think of all the jobs that creates and the supply chains that brings back. It's important to tell that story. People don't hear that story unless we tell it, and so that's a piece of the grassroots work that we do. On the advocacy and education side here in Washington, that's another big component of what we do. And we've talked a little bit about kind of the education efforts that we undertake to explain to lawmakers what's happening in their state and district vis-a-vis private equity investment and private credit.
It's interesting you mention healthcare because, again, if you Google private equity and healthcare, that's where a lot of the scare stories revolve around. So I was reading a Guardian article just before this, and it was like 3,000 words. It read like a Victorian melodrama of all the terrible things that private equity ownership does when it owns a healthcare asset. I couldn't actually finish it because it was verging on the ridiculous. But people are reading this and they're believing it. So first of all, I mean, what are the good stories in healthcare that you're telling people, and how are they received? And do you have to deal with do you have to negate the bad stories?
Yeah, we lean into the positive, and one example from a macro standpoint, private equity has invested about $15 billion in urgent clinics. Part of the story we tell is about access over the last decade. So that's 250 urgent care clinics across the United States. And one of those brands is Go Health Urgent Care, and we did an event with them a couple of years ago, and they've been able to open dozens and dozens of healthcare locations, especially in rural communities. And so, access is a big part of the story we tell, and that's a big piece of the investments we make. Now, another component is innovation. You may have heard of Cordis Healthcare; they're a medical device company specializing in heart medical devices. They were purchased by Hellman Freeman, one of our members in San Francisco, a few years ago. Just 2 weeks ago, they announced one of the biggest breakthroughs in heart stents and stopping blockages around the heart that we've seen in many many years. And so that was an investment, not just in improving the efficiency of a company, but making it innovative and helping it grow into something that wasn't there before, which is quite extraordinary. And so it's an access story. It's an innovation story, and we really think it's a quality of care story too. A lot of the headlines miss the underlying research and studies that show private equity backed healthcare is right on par, and in many cases providing higher quality care than before the investment. And so, it's access, it's innovation, and it's higher quality care. So we think there's a great story to tell there in the healthcare space.
Implicit in what you're saying is that if private equity didn't exist or it was outlawed, these types of companies and innovations wouldn't be getting funded or wouldn't be able to find the funding as easily because they're not as attractive or to public market investors or fund managers. Is that the case that we're filling a gap that would not be filled otherwise?
Yeah, absolutely. A lot of these entrepreneurs, whether it's the healthcare space or elsewhere, are looking for capital, and private equity and private credit, quite frankly, are two of the best ways to get it, because it's not just about capital, right? You know this. It's about the expertise that comes with that capital. It's about partnership. We see our members invest in companies and help them with HR, help them with supply chains, help them with real estate selection. And there's a huge amount of expertise and partnership that comes with the capital. And so, I think that's part of the magic of private equity.
So you mentioned private credit. Obviously, private equity is a little bit more prominent. It's potentially a bit more contentious because they have ownership. But what's your line on private credit? Because it's growing so quickly, it's becoming such a big part of the financing makeup. Why do you see that as a positive for the American economy?
Well, yeah, I mean, private credit has filled a space that has been vacated for a variety of reasons by traditional lenders, banks, and we see the demand growing. People look at private credit and they say, "Is it a bubble?" We view it as organic demand growth. That's why you're seeing growth in the private credit space, and it's not just demand for credit. Again, it's there's interest in that partnership that businesses can have with those private credit firms, and we think that's a winning combination. It's why you're seeing growth there, and why you're seeing continued reliance on private credit to fill in that demand, and help companies grow that maybe aren't ready to sell, but do need capital, and private credit can step in.
Yeah, so I completely agree on that, and I think there's a lot of people in the mainstream finance world bad mouthing private credit at the moment. Talk of systemic risk. I don't see that at all. I see it as the opposite of systemic because you're funding private credit funds are funded with equity, and so these are grown up investment decisions. It's not risk on risk, and it's not leverage on leverage. So I'm actually really excited about the private credit opportunity over the coming decade or so.
But your thoughts are well in line with the Federal Reserve, which put out a study about a year ago, sort of making the exact same argument that there's no systemic risk from private credit, and that's due to the structure that you sort of laid out, and that patient capital, that alignment of sort of LP investor dollars, and which is long term and patient, alignment with the loans that are being made, as opposed to sometimes a mismatch of short-term deposits and long-term loans
Yeah,
in other
exactly.
in other areas.
So it's been an interesting year on the political scene. We've been trying to organise this interview for a while, and you had a leadership transition. So you've been at the AIC a little bit over a year, but you were leading
That's right.
the policy side, and so we started talking under the Biden administration. Now we're well into Trump too. What are some of the things that you've been looking at this year? Are there any successes or policy endeavours that you'd highlight?
Well, yeah. So this year in the United States, the U.S. Congress did something actually great on the tax side, and it's gone underreported because largely they averted a crisis. So in the United States, there was a tax cliff coming at the end of this year, a $4.5 trillion tax hike coming, and the U.S. Congress stepped in, and the Trump administration stepped in and prevented that cliff, which is a really extraordinary thing. Nothing's guaranteed in Congress. We're in the 41st day of a shutdown as we speak, and so gridlock has been the default, certainly in the near past. But if you look further, earlier into the year, Congress was able to get that big tax bill done, and we thought that was really extraordinary that they avoided that cliff. But the second thing they did that we thought was really fantastic, is they provided long-term certainty for a lot of those tax policies, making them permanent. In other words, for a lot of the pro-growth tax policies in that bill, they don't sunset after a year or 3 years or 5 years. They're permanent, which means that investors can model out their investments with some certainty on the tax side. So, on both of those fronts, we think the U.S. Congress really did a great thing passing that tax bill. And as I mentioned, looking forward, one thing that we're really, really excited about is an expansion of choice in the 401k space. That's on the regulatory side. And as the private equity, private credit industry, not new to the retirement sector. There are 34 million Americans whose public pensions are backed by private equity right now. And it's been the best performing asset class in those public pensions over the years, over the long haul. And so in the US, the big problem has been 401k holders do not have access to that sort of those investments, the diversification and growth that comes with them. And so the Trump administration is taking steps to fix that. We could talk more about that. But that's sort of on the regulatory side. So we've been very happy to see what's happened on the legislative side, and we're excited about what's to come on the regulatory side.
So the 401ks, we call them like defined contribution schemes, and it's been harder
Right.
for them to access private markets investments than the defined benefit schemes of and all the big names that have bankrolled private equity for years, like CalPERS and CalSTRS and so on. And so Trump, you're saying, is now making it easier for those 401k schemes to invest in private markets. Where specifically are we on that? What are the recommendations in play?
Yeah, so the Trump administration put out an executive order in August instructing the Department of Labor, who has jurisdiction over those defined contribution plans here in the United States, to take steps to open 401ks to alternative assets, a whole wide range of alternative assets. And the reason that was necessary is here in the U.S., there's been excessive litigation around 401k plans and alternative assets in 401k plans. And so the Department of Labor is taking steps to clarify exactly how plan sponsors can offer alternative investments in their 401ks, how companies can offer alternative investments in their 401ks.
Yeah. So you've just kind of answered my question, but what I was going to say was last week I was speaking with an American RIA, wealth advisor, and he was, and I've heard this said before as well, very concerned that with the introduction of private market assets into pension funds like this, that you're going to have. He actually said to me, a fireman with a 200k pension investing 50 of it into a semi-liquid private markets fund, and he's very worried about the risks there. But as you say, it's all context specific, isn't it? And you can easily scaremonger about something that's new. But if you're properly advised and the target date funds are professionally managed, then that risk is mitigated.
Yeah, honestly, it looks a lot like in the public pension defined benefit space,
Mm.
where you've got a chief investment officer and a whole team of people picking the right mix of private equity, private credit, and other investments for the public pension fund. It's highly analogous to a target date fund in a defined
Mm.
contribution plan, where you've got you know folks who are absolute financial experts helping individuals secure their retirement. Like I said, this is not a new space for us, and that model. I think is very similar, and it provides more choices. Critically, I mean that's what it comes down to. It's an option for individuals who have 401ks, those defined contribution plans, to access markets that are more diverse.
Mm.
Over the last 25 years in the United States, the number of public companies has more than halved. It went from about 9,000 to 4,000 over the last 25 years, which means there are a lot of companies that are private, that are in the growth phase, that individual investors and savers and 401ks can't access. So that's thing number one, is that growth in those returns that we've seen in the public pensions. But the second thing is diversification. These are thousands and thousands of companies that are simply not available to investors now. And if you look on the public markets, you've got the Magnificent Seven driving something like 50% of all growth in the U.S. stock market, that's highly concentrated. So a pretty significant contrast with the private equity space where you've got huge diversification opportunities as well as sort of the opportunity to invest in those companies in their growth phase. We just think it's a great option for folks to be able to consider that they really can't consider today.
Yeah, the thing you've got to bear in mind is that sometimes doing nothing is actually not doing nothing. So, for example, if you decide I'm very conservative, I'm not going to go into private markets, I'm just going to stick with where I've been. Actually, your position is becoming more and more concentrated. It's not staying the same because the markets are becoming more concentrated. So, it could be more prudent.
We're really excited that the Trump administration is offering sort of that as they call it democratization of investment, and we're just excited to be part of that project.
Something else I saw you were involved with is the SEC put forward a private advisor rule, which was subsequently overturned. And the gist of this, I think, is to provide more standardization and transparency around fund terms. So for institutions investing into private markets funds, but that was overturned, and now it's more of a free market. So the question I was going to put to you, though, is do you see scope for some level of standardization when it comes to private markets fund terms, or should it all remain privately negotiated and idiosyncratic?
Well, I think I'll stay in the 401k space. I mean, you can expect the Department of Labor to have really strong guardrails around kind of how those investments look in terms of fees and transparency, and we welcome that. As I mentioned at the top of our conversation, we do a lot of education and advocacy around regulatory and tax, and what we're looking for is a reasonable, predictable environment that's not swinging dramatically, and that's not overly burdensome. But we absolutely think that again in the 401k space, guardrails are necessary. And you mentioned the private fund advisor rule, and the cost benefit was just out of line there, and so we fought it. But are there absolutely reasonable guardrails to have in place? Yes, and we support that.
So you've had a successful year so far. It sounds. What's coming up? What's on your radar for 2026? Let's say.
America is turning 250 years old. Apologies to our British friends. I think that's going to be a big part of the
Mm,
story we tell too. Is sort of how has private equity sort of helped get the United States to the place that it's in? Whether it's we've talked about it, manufacturing is a big piece of that. Winning the AI race is a big piece of
mm.
that. Our members have invested in over 500 deals over the course of the last 5 years in the AI data center space. And by the way, a lot of those deals provide the energy investment along with the data center investment, which we think is fantastic. That's a big part of
Mm,
celebrating America's 150th, winning the AI race.
yeah.
So probably another aspect of that is national security. There's not a lot of fanfare around it, sort of like manufacturing, but the private equity industry is investing in national security as well. Over 150 deals over the last 5 years in the national security space. So that's a big piece of the story we're going to be telling over the course of the next year.
I wondered if you'd give us a little bit of an inside track because you've been in the kind of the advocacy, the lobby industry for a long time. So I'd love to know how it works, how the sausage is made, I suppose. So let me start by asking you kind of a cheeky question, which is, um, how powerful would you say the private equity lobby is in America relative to, big pharma or big food or traditional finance and banks and so on? How powerful is your voice and your penetration into, the corridors of power?
I think I'll answer that a little different way. I would say that members of Congress care first and foremost about their constituents, and they know that private equity investments help create jobs in every district and every state, and so they want to protect those jobs. And we're in the translation business. We help translate private equity to Congress and Congress to private equity. That sometimes requires a lot of back and forth. So that's the business we're really in, is educating and translating, and but at the heart of it is the benefit that private equity provides to the United States broadly, but also specifically in these districts represented in these companies and these jobs. And so we're only as strong as the benefit we provide to the United States economy and those states and districts.
The thing about representing something at a high level is that obviously when you get into specific situations, there can be wrongdoing or stupidity or misalignment of interest. When people bring to your attention specific cases that you can't necessarily that are clearly suboptimal, let's say, how do you deal with that?
Well, it's sort of hard to deal with a hypothetical like that, but
Well, I can make it specific if you want, but I don't think you probably want to. But but say there's a buyout that's been massively over leveraged and it went wrong and jobs were lost. Now that's always going to be a huge simplification. There will always be other things going wrong, but you get good deals and you get deals that don't go well. And so I'm just wondering how you deal with specific accusations and the risk that people take one specific instance of a deal that went wrong and kind of extrapolate that up and say, well, therefore, the structure isn't good.
Yeah, and a big piece of what we do here at the American Investment Council is research. And so we do our best to provide kind of a macro view and context where there are individual cases that folks point to, and use, frankly, to paint an entire industry with a broad brush. And so that our answer to anecdotes is data, and we provide a lot of it here, and we do a lot of great research and have a lot of great research partners, and we provide all of that on our website, and do our best to get sort of that side of the story out there, because we think that that's actually the more accurate picture.
Yeah, yeah. So to conclude, at the beginning, you mentioned about your role defending the license to operate of private capital firms. Do you see anything on the horizon that is a particular threat to that continued license to add value to the American economy?
There's no one thing, but there are lots of small things, and that's why we think the job that we do is important. It's why we have a ton of fun doing our job. We actually think that the private equity, private credit industry is great for the American economy. It's great for workers. It's great for communities. It's great for small businesses. 85% of private equity investment over the course of the last year has gone to small and medium-sized businesses, 500 employees or fewer. And so, we think that that's a really great story to tell, and we think it's a force for good in the U.S. economy. Part of what makes the U.S. economy special, and so, telling that story, we hope that we push back on little ways, little steps toward eliminating the license to operate for our members, maybe in a particular sector or particular instance. We think telling that story can help push back against those sort of small incremental steps that make it harder to invest in the United States, and therefore harder to grow, harder to create jobs. So, that's where we're focused. Is anytime that there's even a little step taken that would threaten that license to operate in a particular sector or maybe in a particular state, we go to that state and tell that story, and we've been very, very effective. So it's not all sort of like a national
Mm,
overarching conversation. Oftentimes it's regional, oftentimes it's sector specific, and we get engaged in those conversations as well.
great, brilliant. Well, it sounds like you're doing a great job. Keep it up, and look forward to catching up with you another time.
Thanks so much. Really good talking with you.
Thanks, Will.
You've been listening to the Fund Shack podcast. Wherever you're listening or watching, please click follow or subscribe. That's all I ask. Thanks for listening. Compelling investments can hide in plain sight. Brookfield's approach to private equity focuses on essential industrials and business services that help shape modern life, yet are often overlooked. It takes vision from an integrated team to see their potential, perspective from a $1 trillion ecosystem to acquire with precision, and expertise from more than a century of owning and operating businesses to build lasting value. It takes industry. Learn more at brookfield.com/ittakesindustry.